How many of you have you been where I was, jumping from strategy to another, or even find yourself on your screen, it's full of indicators, and find that your account is still at the same level, or you even blown the account completely. And then you're like, yo, ke blowile. Yeah, that was me then. On today's video, finally, I am going to reveal the strategy that changed my life in trading. I started focusing on fair value gap, order blocks, and the market structure. I am going to show you exactly how I find the high probability setup that changed my life, and it is highly profitable.
So for this video, I am not the financial advisor, but it's for educational purposes only. So I'm just sharing the ideas how you can maximize your profits and secure your capital.
Without wasting your time, let's get straight to the charts. Here is the basic plan that I follow now. I stop chasing the market and I learn to wait. First, I wait to see the price making a big decisive move like this one here. And I want to see also the break of structure or the change of character or the market structure shift and having the imbalance in price. That's where the magic is going to happen. So now if we have the fair value gap here, the fair value gap, it is formed when there is the imbalance in price. And the first candlestick and the third candlestick should not overlap the body of the middle candle. So now we have our bearish fair value gap at this level. What are other things that we need to look for? So looking for the fair value gap that comes from the higher time frame, like 1 hour here. And now we have to look for other confluences, like the break of structure or the change of character. So now we have this level here that fair value gap is the one that led to this move that break our level here and giving us this change of character. Need to look for the order block as another confluence. It's formed when we have this kind of big decisive move, and we will mark the candle, the last candle that was formed before the price can drop. So now we have our bearish order block after this movement here that formed the fair value gap and led to the change of character. For the fair value gap, it has to be not tested before. So we have to look for the fresh zones. We will just wait for the price either to reject inside the fair value gap or outside this fair value gap. So now you see the price, it's rejecting this fair value gap. So that's where we are going to be looking for the entries. How many confluences do we have? We have this bearish order block, we have the fair value gap, we see the change of character, and look at this candle here. So you can see we have a bearish engulfing, and then we also has this other candlestick. Forgive me for the names, but the price, it's rejecting this zone. So it's rejecting our fair value gap. So our entry will be at this level here, and our stop loss, it can be either above this bearish fair value gap, or you can even make it higher to the order block and target 1:2 risk reward. And if you see that the market is giving you, you can even hold your trades, trail your stop loss, and even target higher profits. You see, we have the big sell here that the sellers were in control of the market, and now here that the sellers, they lost momentum and the buyers are coming in by full force. So we have the fair value gap around this area. So what I do, I wait for the market and see what is going to happen next. Okay, so what we're going to do, we are going to mark the fair value gap You can see we have multiple fair value gaps. So I will just share one secret with you, because now some of you will be like, okay, so there's a lot of fair value gaps, and then which one to focus on? So in that case, you will just come here to the tool section and click here on gun box, track it down to where the move started. So you'll have something like this. I already set mine to 0.5, 0, and 1. But if you want to know how you can set yours, because it doesn't come like this, so you'll just go to the settings and then use check in 0, 0.5, and 1. So which will serve as our premium zone here and our discounted zone. So now that we have this impulsive move that shows the buyers came into the market aggressively, we want to see also other confluences like a change of character. So we still need more, like order blocks. So how are we going to identify the order blocks? You know, we need to highlight the last candle that was formed before the market can change the direction, or before the aggressive move. The candle before the aggressive move, I'll just highlight all of them right there. Then highlight it in blue. We have the bullish order block. Now we can look up for our entries. So always bear in mind that we buy when it's cheaper. So we're always looking up to buy from the discounted area. Now the main fair value gap that we should be looking forward to, it's this, the last fair value gap. So how are we going to take our entries? Then we want to see the rejection at this fair value gap. We want to see the price close within the fair value gap or close above the fair value gap to show that the buyers are now in control of the market. You may agree with me that now you see the price close within the fair value gap. It did not break this fair value gap. That means it respected this fair value gap, and this fair value gap has never been tested before. So if your fair value gap has never been mitigated, then that is the high probability fair value gap that you can look for the entries. So we'll just set our risk reward tool to 1:2 risk reward ratio. Your stop loss should be below the candle that created the fair value gap, but always make it a habit that you give your stop loss the room to breathe. If price hit back, come and take you out. That's it for today, guys. If you watched the video until the end, please don't forget to comment and let me know what you think of the video, and any suggestions that you may have for the channel, please let me know on the comment section. Until we meet again on the next video, I wish you all the best in your trading journey.